Investors, in the last video we discussed SBI Magnum Income Fund. In today's video we are going to discuss SBI Banking and PSU Fund. It is the medium term capital appreciation fund. If we see the return since inception, it is 7.43%. The risk rating of this fund is moderate. The AUM or assets under management of this fund is 4126.65 crores and the NAV as of 9th January 2026 is rupees 3200. If we see for whom is it suitable for, so it is suitable for short term or 1 year, minimum 1 year. And if we see the minimum lump sum amount of this fund, it is 5000 rupees. And if we see the minimum SIP investment for this fund, that is the systematic investment plan for this fund, is rupees 500. The age of this fund is 16 years. Now let us see what are the details of this fund. So it will take a few minutes to load. Now, if we see the objective of this fund, it is a debt fund and it is also an open-ended fund. The scheme seeks to generate regular income through a judicious mix of portfolio comprising predominantly debt and money market securities of banks, public sector undertakings, public financial institutions, and municipal bodies. So what it does is, it invests your money in debt and money market securities of banks, all the public sector undertakings, the PSU companies, public financial institutions, and all other municipal bodies. So if we see the launch date of this fund, it is 9th October 2009. The expense ratio of this fund is 0.81%, and if we see the exit load of this fund, it is nil, so there is no exit load. The benchmark of this fund is 2. Now, if we see the returns of regular growth since inception, it is 7.43%. The last year it gave a return of 7.43%. If we see the last 3 years return, it is 7.21% per year or per annum. And if we see the returns from the last 5 years, it is 5.4% per annum. We have already seen the minimum lump sum amount of investment in this fund is 5000 rupees. But if you had invested rupees 5000 in the first term, and again you want to do lump sum investment, then you can use or you can invest rupees 1000 or more. If we see the historical growth of this fund, so the graph is pretty good, it is going upwards. And if we see the 3 years graph, it is pretty stable and going upwards. And if we see the 5 years graph, it is pretty stable. So I would suggest that if anyone wants to invest their money in mutual fund and they want bank like returns or bank like safety but returns more than bank or double than the bank, then they can definitely choose this fund. Now, if we see the benchmark of this fund, the risk rating of the benchmark is low to moderate and the risk rating of this particular fund is moderate. Now, we have already seen that what is the over objective of this fund, and now we will see what is the investment strategy of this fund. It is an open-ended debt scheme predominantly investing in debt and money market securities issued by banks, public sector undertakings, public financial institutions, and municipal bodies. So everything is same, no different from the previous one that we read there. Now, if we see who is the fund manager of this fund, so the fund manager is Rajiv Radhakrishnan. He has 22 years of experience in the asset management industry with 20 years experience in fixed income management dealing. Rajiv joined SBI FML in 2008 in the fixed income category. He is currently the CIO of fixed income and directly manages many funds of this flagship fund. So we have seen he is managing this fund since November 2013, and the other manager is Mr. Ardhendu Bhattacharya. He is managing this fund since December 2023. He joined SBI in April 2019. So we have seen that. Now if we see what is the breakup or the breakup of this fund, so where is your money invested in this fund, so we will definitely go see all the holdings. So 8% of this fund is invested with Kotak Mahindra Bank, 7% is invested with Bank of Baroda, 6.7% is invested with ONGC Petro Additions Limited, 6.01 with Power Grid Corporations of India, 5.89 with Small Industries Development Bank of India, 5.34 with Canara Bank, 5.26 with AU Small Finance Bank Limited, 4.86 with State Bank of Karnataka, 4.29 with GAIL India, 3.89 with ICICI Bank, 3.63 with India Infrastructure Finance Company Limited, 3.57 with NABARD or National Bank for Agriculture and Rural Development, 3.26% is in cash or cash equivalents, 3.11% is in National Highways Infra Trust, 2.88 is with Equitas Small Finance Bank, 2.57 is again with NABARD, 2.44 is with Power Finance Corporation Limited, 2.38 is with HDFC Bank, 1.87% is with State Government of Tamil Nadu, 1.83 is with Bank of Baroda again, 1.62 is with State Government of Maharashtra, 1.58 is with Import Export Bank of India. 1.48 is invested with REC Limited, REC Limited. 1.47 is invested in NHPC Limited. 1.47 is in Nuclear Power Corporation of India Limited. 1.45 is with Government of India. 1.2% is with Axis Bank. 0.72 is with HDFC Bank. 0.72 is with NTPC. 0.62 is with State Government of Gujarat. 0.61 is invested REC again. 0.61 is again invested in Small Industries Development Bank of India. 0.6 is with Punjab National Bank Tier 2 bond under Basel 3. 0.37 is invested with State Government of Punjab, and 0.25 is invested in Canara Bank at 1 bond, 81 bond under Basel 3. So these are the companies, or these are the public sector undertakings that your money is invested in. Now, if we see the sector allocations of this fund, so 62.17% is invested with financial services, 10.79 is with sovereign, 9.67 is in power sector, 6.71 is in chemical sectors, 4.29 is in oil, gas and consumable fuel sector, 3.26 is in cash, and 3.11% is invested in services sector. Now, if we see the performance of this fund, so if we see the performance in line with the benchmark and additional benchmark, in 1 year it has beaten the benchmark as well as the additional benchmark. But if we see in the 3 years case, then it has underperformed the benchmark as well as the additional benchmark. And if we see again the performance with the 5-year rate, so it has beaten the bench. It could not beat the benchmark, but it has definitely beaten the additional benchmark. And if we see the return since inception, then it could not beat the benchmark, or it missed the benchmark by 0.3%, but it has definitely beaten the additional benchmark. Now, what would have happened if you had invested your money 1 year prior to this video, or 1 year before in this fund? So if you had invested rupees 10,000 in this fund, then your money would have become 10,743 rupees. If you had invested 10,000 before 3 years, then your money would have become 12,327 by now. And if you had invested 10,000 rupees before 5 years, then your money would have become 13,008 rupees by today. And if you had invested in 2009 in this fund, then your 10,000 rupees would have become 32,018 rupees. So that's a pretty good return if you consider the safety of this fund. So I will definitely provide the link of this fund in the description box. You can go and invest there. And if you want investment done by the help of me, because I am a mutual fund distributor, I am MD Imtiazalam. I have passed the AMFI exam as well as I have passed the NISM exam and got the AMFI registration. So if you want total help regarding the KYC and the consultancy regarding in which fund you should invest, then you can definitely contact me in the mobile number given in the description box as well as the email ID provided in the description box. I will meet you there. Hope to see you there. Thank you for watching this video.